Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, April 25th. Mike Boutros with you on the mic. Good to be with you guys. Finally seeing the return of some volatility here. Except the dollar just stretching across the board. Okay, the top performer against the dollar today, guys, is Japanese yen. Everything else is lower, not by much, and certainly all the majors at this point being pushed to some critical regions. So we got a lot to look at to wrap up the week. On the menu, DXY, obviously Euro with the rip higher, Aussie, Kiwi, Sterling moving lower, dollar CAD holding a pretty big resistance region here. We'll take a circle back and look at gold with that recovery we were looking for. And then some of the other daily charts, guys, that I highlighted earlier in the week on dollar Swiss and Aussie yen, both of those coming into those huge levels that we looked at. Aussie yen even more so, pushing even lower. So we'll take a look at those as well. That's what's on my list, guys. Any questions or trade setups you'd like to review? Feel free to throw them on the message board. Good morning to you, Jaya. Hello, Iman. Great to see you. Sorry, upside down my first morning. Oh, no worries. Amen. Good to see you in the room as always. So let's jump right in. Obviously, the dollar yesterday, guys, ripping pretty high. Here's what the DXY looked like earlier in the week on the update. You know, the weekly chart really had us looking at this 97.87 level, guys. That's the 618 retracement, the entire 2017 decline. This is the first test. Despite all the strength that we've seen, this is the first actual test. We've tagged it and run through. If we materialize a close for the week above this region, you're really looking for a stretch up into like 99.30s, 99.40s, where that upper parallel comes into play. Recall that the lower parallel, the slope has been very clean. Nice median line breaks, nice 50 line break. This is actually a 38.2 if I'm not mistaken. Yep, 38.2 of the slope, really nice breach, support. That's your next upside slope. The onus, though, is still on a breach above this trend line. Okay, remember that's the 2015 trend line off support. The parallel, instrumental in every major pivot in price. Here we are. Okay, all things held constant, we should be seeing acceleration up here. Okay, it's a big resistance level, Fibonacci consideration, former swing highs, fresh yearly highs, the works. So all things held constant above 97.87, you're looking for that stretch possibly into more significant upside resistance in DXY. Also want to note that the momentum trigger in weekly RSI also looks to be giving out. Again, we can't make any assumptions until we get the weekly close, but all things held constant into the Friday close, if this does materialize, it's a legit breakout. And again, if we take this as objective as possible, guys, this looks like a yearly opening range. First quarter, same range. This is the first material break you're getting. Okay, so cautiously bullish here. I don't want to chase, and I'll show you there's a couple things that on the intraday make us not want to chase here, but all things held, we're looking like we're possibly making a breakout here. DXY in the daily looks like this. Okay, this is the same slopes we've been following. Here's the pitchfork off of last year's and the 2017 low. Been calling all the pivots in price, resistance, resistance. That's your next upside slope. Now there is 100% extension off of last month's low. That comes in at 98.52. Just higher is going to be basically at 98.70 region, okay, of resistance. That same slope. So still looking higher, but not too much higher, not chasing from here. 98.52 is the first level, then look for the slope just higher. Momentum about to breach into overbought territory. Here's the intraday chart. And here's, whoops, and here's what it looked like earlier in the week. Okay, so there's the daily chart. Again, we just broke through this. We're now trading up here, intraday. That was the slope that we were working with. We've reworked it since. Here's the 120. Okay. High day close 97.42. That was right here. We broke right through as expected. When you breach these major key regions, this was the high day close, you expect to see acceleration. That's exactly what we got. Once we broke through, acceleration, 97.71 was the next major level that we were looking for. That held for not even a day before the breakthrough and pop higher. So again, on the intraday charts, there's 100% extension of the advance off the just off the last swing low that we made. So this extension right here is using the low that we made back into the end of March and the low that we made this month. The extension takes you 98.52. That's on slope too. So a decent area near term to look for this stretch to possibly look to get a little tired. Again, on these trades, guys, it's very important that we note a couple things. Very careful not to chase here. There's nowhere to put, a respectable stop. You're starting to see some divergence on the price action here heading into the close of the week, okay? Keep that in mind. Reactionary points on the upside, 98.52, and then the yearly open at 98.69, both levels where you could see a little bit more of a reaction kickback. So if any long exposure that you have on the DXY, watch those two levels to the upside. A near-term support, I still have a 97.87, the same level that we were talking about for years. Still that same 618 converges on former slope resistance, so should be support now. The game plan is if you're holding longs, these are where you want to shave off most of your positioning. If you're looking for new opportunities, I'm looking for a reaction on a stretch into this. There's nothing to do for me here on the long side if you're not already long, specifically on the DXY. Okay, let's just see real quick if there's any merit to a slope here. Even near term, resistance, breach, acceleration, support. It's your next level. Okay, near term support 97.87, bearish inval for the immediate advance is going to be down here. Okay, so a break below 97.71, again, that former swing high from last year, the high that we exactly registered back in March. If we get back below that, you'd look for a larger recovery. All things held constant, still on course for that stretch near 98.50, I think. Any questions on the DXY? Tricky stuff here on all these stretches, guys, because the markets are running. This is the way it works. We work in these, we get stuck in these levels of real low volatility. Markets are range bound as hell. We're all frustrated. Then before you know it, everything starts to rip. The worst thing you could do right now is start to chase. Okay, so I'm just going to put that cautionary note out there. Here it is on the combo for you, Ty. And you don't see this 98. I'll copy that to the daily chart too, so you have it up there. That's the 2016 open. Okay, that would be like the top level as far as the slope is concerned. So that's the bigger region of resistance, in my humble opinion, on this DXY stretch. One other thing to note, objectivity. You look at this on its face value. Here's the month, guys. This is a perfect example of a monthly opening range. Here's your monthly open. You set a high. You test that high the first 5 days of trade. You make a new low. You come back to test the high back on the 18th. Guess what? Holds, breach, acceleration. Look for a late month high. The upper slope looks very juicy, says Ty. I'm of the same mindset, my friend. I am of the same mindset. There's nothing for me to do here unless we get closer to a major resistance level. It's a breakout, guys. Now, I do have to say this. With everything that's going on in the markets and sort of the risk rally doing what it's doing, or failure to do what it's doing over the last couple of days, if we were to spike intra-week into this region, or even if we were to hold right here, and we were settled the week back below 97.87, I say this now because it's our last webinar for the week, but if by some stretch of the imagination tomorrow we settle Friday close below 97.87, guys, that would be exhaustion like no other. That'd be a scream for a short. Remember what we've done at this level. On a closed basis, we've never cleared it. This is the first attempt to push. Watch the close for the week. Okay, watch the close for the week. That is DXY. Next up on tap, euro dollar number 2. Here's where we stand on the euro. Well, 111.86, same 618 that we're looking at on the euro as the DXY on the opposite side. That's the 1186 level. 618 retracement of the advance off 2017 lows, just lower. And we talked about this region exactly, 1130 into 1140, I think we noted, is the lower parallel. So this pitchfork off the lows from 2015, 2017, again, really neat on the median lines, really clean on the parallels. Here's the lower parallel right now. And here's the momentum break in on the weekly chart. Watch the close of the week again. This is the first trigger break that we've seen for that same slope off of the lows from last year. So if price holds this level, specifically we slide below that parallel and momentum holds that break, again, that's sort of an objective break of the month, of the yearly and monthly opening range lows. Okay, Euro testing big support right now. What is the price and date of the upper dot? Ty, which one? On Euro or on DXY? DXY. So this right here is basically this week. That's the 200-day moving. This is the 200-week moving average. That's at 133.37. So weekly resistance, I would say, is right there. Okay, that's the highs that we made last week. You have slope resistance off the highs from September of last year, and you have slope resistance from the highs of March of last year. Both of those all converge this week and next week, basically, on that 200-day moving average. I'm sorry, DXY. You're likely looking at DXY. I'm still looking at Euro. Yeah, this one right here is going to be this week and next week, I'd say, are the two levels of importance. That comes in right around 99.36, 99.30s. Okay, weekly chart, right, Ty? I do want to just remind you that on the intraday chart, you have 98.52 is going to be that 100% extension. So just keep that in mind first. Then you have the 2016 Open 98.69. That converges pretty nice on that second level. Weekly, you're still up into 99.30s. All right. So for Euro, here's what it looks like on the daily chart. And this is why this area is so big for us. So again, there's that long-term 618. There's the lows that you made for the year back in March. We tested that opening range low again in April. Here's the break. So the monthly opening range has given out. We've broken below monthly open. This is your first area of support. Just lower, parallel support. It's the same slope of resistance. Support, just lower. Again, the reason why I can't say, let's be short. It is breaking support. It did break the monthly opening range. It did break the 618 retracement, but we're still coming up on a pretty critical area here. So watch this level. I do have 1080, I think I wrote yesterday, 1075. I think Jamie's looked at the same region as the next downside level. That's this level right here, 1075. So let me show you the intraday chart in just a moment. Let me zoom this out, snap the levels for you, get our slope right. There we go. Here's what we're looking at with the Euro. Okay, and here's what we were looking at last night. So, oops, wrong report. There it is. So there's the intraday chart, right? We broke below 1164. That was 100% extension off the low, but more so importantly, guys, you had that slope. So parallel off the high, extended off the low, saw that break there. So yesterday we noted, look, initial resistance is right here, 1164. That's like the first level. If this break is legit, price should hold that, and a downside break should see us test that more significant support down lower near 1075, 1080. It rallied and it tried, man. It tried an overnight to even get to 1164. I think the high registered just pips below. I checked it this morning. The high was 1162, and then it turned lower. Here's the break. Again, you're seeing divergence in momentum. You're testing a major key critical level. If this was going to break, I would have wanted to see acceleration here and start to push lower as we open US trade. It's the same trade that we're looking at on the other side of it, guys. If this thing were to recover back through 1186 into the weekly close, I would count that as a false break all day long, and I would try to fade it higher. That said, sub 1186, we're bearish. It's a big level, and the break saw acceleration. It's exactly what you need to give conviction on that level. And on top of all of that, it is the objective April opening range low. So on an objective basis, you set the monthly opening range, you break the lows, you stay bearish below the opening range low, you look for resistance there on any recovery. And only adds further merit that that level is such a critical level on the daily, on the weekly, and certainly just from a standpoint of the range, the Fibonacci range we're in. All right, so sub 1186 risk is lower on a downside move here. I would love to see a drop just below 111, 111.80s might be a nice spot to look for some exhaustion. The only thing that would put us back on the constructive route on this would be a recovery and a close back above 1186. Questions on Aussie? Excuse me, on Euro. All right, so that is euro dollar. Don't forget, next week we also do get the release of the FOMC interest rate decision, guys. So if the dollar is going to make a wicked move, there is some event risk on tap next week that could offer us that play. All things held constant, you know, it's a breakdown. It's a breakdown to huge support. This is the only thing I'll be looking at to the close, guys, is the weekly charts on all of these. Huge. Okay, number 3, Aussie dollar. Here's Aussie. We're breaking, or we're attempting to break to fresh yearly lows. Or excuse me, I take that back. The yearly lows are down here, but a major pivot in price, right? The yearly open came in at 70.42. A 50% retracement of this year's range gives you 70.20. That's the 20 pip region of support that has held this thing all year long. Here's the decline in March. Here's the rally into resistance, 618 resistance on slope. Perfect hold. Here's the break lower. Momentum, that's much deeper than the euro, much deeper than the DXY trigger breaks and momentum, right? So the weekly charts, guys, really being our guidance here. When we see these big moves, that's what we automatically go back and default to. Where are we on the weekly chart? Is this invalidating bigger support? Are we changing sort of the momentum profile? And on most of these trades that we've just gone over, I think we are, guys. Euro giving you a support trigger break on the weekly chart, breaking support in price. Aussie dollar breaking the trigger support on the weekly chart, price breaking lower. DXY breaking resistance on the RSI trigger, price breaking resistance. All of these things, we are just looking for a weekly close to validate, but they are all pushing some pretty big regions. Okay, so this is big. And certainly if dollar, same exact thing. I'm going to go back again. It's going to be like a broken record today, guys. Same thing. If the weekly close were to materialize, this thing were to suck back above 70.42, I would count that as a false break. All things held constant, sub 70.42, you're at risk. Here's Aussie. Here's the daily chart. Whoops. We'll go over the scalp in a moment, but here's the daily chart that we've been following. Right? We're following this upslope, really strong reaction into that confluence resistance there. You had the 200-day moving average, 618 retracement, median line resistance, the whole 9 yards. Nice reversal, shifted our focus to slope support. Once we broke back below the April open, there's the yearly open. There's the low day close. The last target I gave you guys was 70. So if you're holding shorts and you wrap that up at 70, I don't blame you. It's a place to look. The low week close, the actual stretch low for March in the same exact region, right at that 70 handle. So look, it's on the back of a 3-day, this would be the 4th day decline. Another, you know, I hate to be so, to sidestep here, but again, I can't get involved on the short side. I can't get excited about it. You're testing the low day close, you're already down, what, 2-3% almost off the highs for the month. So on a recovery, again, initial resistance, look for possibly yearly open. Slope, bearish inval. The only thing that would put me bullish Aussie would be a break back above monthly open resistance at 71.22. Okay, beyond here, you're looking for 95.50, 69.55. That's the 618 of this year's entire range. So the 2019 range all together gives you 618 right there at 69, 55. Here's the intraday chart. And here's what we looked like yesterday. So this was one of the main reasons that I kind of put out that cautionary note yesterday, that 70 was a big level, no longer interested in shorts. The immediate downside buys, I still think that's the case, guys. And even though you're getting price right now trading below it, it's not by all means a bearish signal, but certainly the bearish momentum is waning. Price action with a lower low, higher low, higher low. Now again, these indicators where you get these divergent signals below 30 tend to be pretty weak signals. Okay, but as it stands right now, if it settles below and we push lower into the US trade session, 69.55 is your next target. I'm of the mindset that we need to be cautious here. I'm not chasing the lows. I think this thing kind of gives us some sort of near-term recovery. If you take a slope off the highs that we were following yesterday, and you take a parallel extended off that low they made on April 15th, the slope seems to be catching support. That's another added confluence region, further signifying the 70 handle. And even intraday, you get some wick action into there. So if anything, Aussie is the worst performer against the US dollar heading into the US trade session, guys. So if anything, this is going to be the one I'd look for the exhaustion trade if we do recover. Okay, 70 is huge. And again, on the daily chart, that low day close, stretch low from March. Let's see what happens here on a close basis. There's the combo for you. Thai. Bipin says dollar yen. You know what? Let's do dollar yen next. Sure. Yen is the biggest performer, the strongest performer versus the US dollar heading into the US trade session. Ty says got it. Right on, Ty. Yen with Aussie, Kiwi, Swiss, CAD, and Euro, Bipin. I don't know if we'll have time to hit all of those, but let's do our best. Start off with dollar yen. Listen, I don't have a scalp on dollar yen. I haven't traded this thing on the intraday basis. I was kind of scoping it out this morning. I'll show you what I was looking at, but this is the only thing that I've been showing you guys from my end. Okay, here's dollar yen on the weekly chart first, just to put things in perspective on where we are and why 112.60, 112.40 was such a big region for us. So 786 retracement from the decline off last year's high, taking into account the massacre we saw earlier in this year, gives us a nice region here at 1143. Just below that, 1183, is the 200-day moving or 200-week, moving average. Add to that 2018 stretch open. That's where you open the year. It gives you 112.60. So look, on a closed basis, we haven't even invalidated the moving average, let alone this key region of resistance. Okay, now intra-week, that's a different game, right? Intra-week we've spiked here a little bit, but man, last week was almost a complete doji, and we're almost on track to do that again as momentum holds sub 60. If you put a pistol to my head, I would want to short this. I know we got stopped out on the swing trades yesterday with that short that Jamie was trying to put on. I still like it. So anyway, weekly chart, this is really important. 112.60 is the upper extremity of resistance. That's the breakout level. I wouldn't get straight bullish dollar yen buying to or a conviction long, I would say, unless we settle above 112.60. Here's dollar yen on the daily chart. So I was showing you this on the other chart. This is the 786 of the entire drop from last year's high. Look at this slope. 1 touch, 2 touch confirms, 3 touch, 4 break, resistance, resistance. Look where we turned yesterday. Right? Momentum. Like a ceiling right into 60. So look, yeah, I'm of the mindset if there's anything that's going to be the dollar pullback, I think this would be the play. Here's what I'm looking at on the intraday chart, Bipin. Again, just for your information, Bipin, I'm not sure how long you've been with me, whether it's here on SB or Daily Effects. I'm not really a big dollar yen trader. I've had bad experience with this pair over the years, so it's not my favorite cup of tea to get involved in, but this is what I'm looking at for the near term. This is a 240-minute chart, guys. This is the high that you made back in March, the low that you executed that same month, and the high that we just made. And you have a slope here just off of last week's low, 1 touch, 2 touch, 3 touch confirmed. So look, if we pivot below 111.60, Cool. 111.37 would be another soft target to look at. That would be also that slope. Downside break from here opens it up. Basically, I'm working with 112 resistance. Let's just say that. Anything you take on the short side needs to be a 112 hold. Okay, so in this trade specifically, it's Thursday, guys, and this thing is still holding the initial weekly opening range low. Here's your lows. You stretch into a new high yesterday, but quickly recover. We're essentially unchanged on the week, guys. This is poised to put in another weekly doji off the highs. If that's not resistance bearish, I don't know what is. All right, so still looking for, still looking for highs to sell. Still looking for advances to sell. It would be against the weekly opening range high that we made. So that high that we executed yesterday, guys. Any short you take would be against that. Downside targets 1157 and 1137. Look for a bigger reaction there if reached. Bipin, does that help? Not really a trade I get involved in too often. The only other one of the pairs that you're looking at, I'll go over real quick because we've covered it, is Aussie yen. I put out a piece, or I put out a look at this earlier in the week. Pippin says, great, right on, Pippin. Great to see you in the room, sir. Here's Aussie yen. You guys remember this setup. I don't have an intraday on this, but man, the daily was pretty clear. Here was Aussie yen earlier in the week. Okay, we said, look, this thing turned from a magnificent resistance barrier. Loved it. 75, 80, 75. We talked about it here in the room. It was a 764, retracement from the decline off of the late high they made last year into the low early this year. You had basic slope support. A parallel off that gave us perfect slope resistance. Add to that, you had the 50 line for the current pitchfork that we've been following off the highs from 2017, 2018. So look, it's really a beautiful spot to turn from. The initial targets were monthly open, right on 70, just below 79. And then this was the next major region, 78, 75. It's the 618 of that near-term advance from last month's low, and also a pivot. So you had a 1 point, 2 touch, 3 touch confirmed trendline resistance. The break did fuel acceleration. We saw support there. We bounced higher. That same slope converged right on that 618. So for me, that was really the reaction to see what happens there. Not only did we break through that yesterday, but we closed below it. That suggests that there's probably some more downside to go here. Okay, on the intraday, there's been no opportunity to actually try to get into this. I was working with this slope earlier in the week, well, into the start of the week. This is from last week. And for me, the play would have been, if we hold support here, look for the rebound to sell closer to the parallel resistance, closer to the opening range highs for the week. We didn't get it. And not only that, what do I always tell you guys? The breakdown of a downslope support will typically be the sharpest part of the move, and here it is. Okay, and here it is. So for Aussie yen, again, it's one of those trades where I'm not too keen on getting short here. Again, you're seeing divergence into the lows on the near-term charts. Even the 120-minute chart is showing it, right? Divergence into the lows. You have some slope here. It's been kind of messy. You got that whip through here earlier, I guess late in March. So not a conviction trade, but man, Bipin, it was a big drop, and this is the first area I think you want to be very cautious of trying to press any fresh shorts. Next downside target, by the way, is down here. Okay, it's the close low that you made back in February of this year. It's still the respected close low. We spiked lower back in March, but we didn't execute a lower. We didn't register a lower low. So the low we close is still, defined by that February 8th low, and that's going to give you 77.75. If we close below this parallel, that's your next downside target, and it also converges on the median line. So interesting stuff here on Aussie yen. Just something as reference to keep an eye on. I haven't been actively involved in this one. Ty wants to look at yen combo. Oh yeah, I didn't give you the combo. I'll come back to that in a second. Bipin says, I love your analysis for years. Well, Bipin, welcome aboard, my friend. You're in the right place. Here's the dollar yen side by side. Here's your combo chart. Cheers, Ty. I appreciate that comment, my friend. I wouldn't say that. Sometimes he says nobody's better than you. Well, trading's very personal, you know. Some people will jump on board our strategies. Some people will not. What am I looking for here? Ah, Kiwi. That's what was next. I know. For number 6, Kiwi dollar. Ty, you will be. He says, I want to be able to draw, I hate the word draw, but dress your charts like me, and you will, Ty. I mean, it all comes through practice. The biggest thing I can tell everyone in the room, guys, is it's just like any other skill. The more time you spend with the charts, the more it's all going to make sense to you. Spend time with the charts. It's funny. It's kind of like a funny thing to tell people, but bring up a blank chart. Sometimes if you're in a mess and you're kind of in a rut and you just don't go what's getting, go ahead and just click on remove all indicators, remove all drawing tools, and start from scratch. You know, um, repetition, practice. It's just like playing an instrument. It's just like drawing. The more practice, the better, Ty. So you're in the right place, sir. I'm confident about that. Euro, Kiwi, and Kiwi CAD. Bippin, I'll add that to the list. I'm not sure if we'll have time, but I always try to accommodate. So let me try to get through this quick. Kiwi. Here's New Zealand dollar. Another one where weekly charts have us coming into some interesting levels. And for Kiwi, it's different because Euro made a new yearly high. DXY made a new yearly high. Kiwi not made a new yearly low. Here's Kiwi dollar from last night. Okay, here's the weekly chart. So the level in focus is 65.85. I told you that level yesterday. That was the stretch low that you made in that early drop off. I hate the fact that we opened the year with these massive drops in Aussie, massive drops in Kiwi, even the yen crosses even more so. But certainly the stretch low is still going to be the objective opening range low for the year. That comes in at 65.85. Ty, I got that request from someone else. He said, I wish you would do a webinar on standard approach and tools on TradingView. Help us get set up, I think you mean, to do this ourselves. So Ty, you're in the right place, man. You're in the right room. I mean, you know what? Let me take a step back. I had a couple of requests for that. We'll see if we can't put together a webinar where we're just kind of like putting together a setup from scratch. But seeing is, in my view, the best way of really kind of making this stuff sink in and grasping it is seeing it done in real time. So I digress. Back to Kiwi, 65.86, looking for a reaction there. As I said in yesterday's piece, the immediate decline is vulnerable while above this region. Initial resistance, let me take it back to Kiwi on the daily chart. Here's what it looks like. So remember, this has been a multi-month consolidation. The break of consolidation support saw resistance. In the confines of that decline, this pitchfork offered a lot of guidance. Okay, the 618 line of the range for the pitchfork was resistance, was resistance, was resistance, downside break of the key support zone, the yearly open at 67 got us acceleration, median line support, median line support. Yesterday's move broke below confluence support 66.33 is the 618 of the yearly range of, the advance off last year's low and the median line. And what do we get when we got that? Acceleration. It's exactly what we want to see. So here's the objective yearly opening range lows, near-term resistance right back at 66.32. Next downside target of importance is 65.50. Now, this red slope right here that you see is just a parallel of the same gradient extended off the low that we made from March, converges on that 764, I want to say into the close of the month, basically into Monday, Tuesday, at 65.53. But objectively, you're testing the range lows. A lot of the other trades broke the yearly opening ranges. So those give you conviction to chase. The fact that Aussie hasn't broken the range lows of the year, the fact that Kiwi hasn't broken the range lows of the year has me a little bit cautious that you could see a little bit of a recovery here before you start to move lower. Key resistance right now, still 66.30. Kiwi may set a new low tonight with the Fundy report, says Aurelian. So yeah, Aurelian, the fundamental announcements are always there. What's on tap tonight from Kiwi anyway? So tonight you have consumer confidence data and then you have trade balance data. Yeah, I don't see those giving you necessarily a major move, Aurelian. Historically speaking, trade balance figures from New Zealand haven't been the biggest market movers, but certainly the risk is there. Here's the intraday chart that we've been following. And again, here's what we looked like last night. So that was the 240 minute. Let me show you the 240 minute now, just for the sake of consistency. Here's what it looked like. So again, that January low, 65.85, it's near-term support. Could rally from here. 66.30 to be your first level of resistance. Bearish invalidation is still the opening range high for the week. So I don't think you get quite that high. But the bigger play for me, specifically because on the intraday chart, this slope has been so clean, right? Upper median line parallel, resistance, resistance, break of the 50 line, acceleration, resistance. We're straddling the median line, resistance again at the upper 50 line, support just ahead of the lower 50 line, the break of the lower 50 line, acceleration. So I still think you can get a tag of 65.53. Near-term resistance 66.30. So questions, comments, concerns on Kiwi. Be careful. The stretch is nice. The break is nice. But we're coming into the yearly range lows. Could get a little bit of a pop near term. There's the side-by-side. Aurelian says, understood. Right on. Right on. All right, that is number 6. Number 7, Sterling. I think you need to pay attention here. You need to pay attention here. So here's the thing with Sterling. The downside, so let me take a step back. Remember early in the month, as this thing was in consolidation, remember we were talking about the weekly chart. We were saying, you know what? Sterling is one of those trades where you want to see a new low to complete some sort of correction off the high. The reversal off of 33 was huge, really nice price action on that approach. The median line was there. You had some parallels there. Really nice turn. We sat on that 38.2 line, or excuse me, this is the 618 line, for weeks. Literally every week, striking a low into that parallel, striking a low into that parallel, striking a low into that parallel. Again, into the start of this month. Last week we broke lower. This was the first area that we said, watch for a reaction here. Couple things. So for Sterling, the broader bullish inval, I left at 27.55 into 28. It's the 618 and the yearly open. I'm going to require a drop below this to invalidate the broader advance that we've been working with. But right now, as we speak, we're testing slope support. Plain and simple. Whoops. Okay, we're testing slope support. Beyond here, you're looking for 28, you're looking for 27.50. But right now, that's the risk. Sterling on the daily chart looks like this. Here's that same slope we were looking at on the intraday, on the weekly rather. Here's what it looks like on the daily chart. Here's your yearly open. Again, this slope here that you see is a parallel of this. So 1, 2, it took a parallel extend off the high. Pretty close, pretty close. Look what happened when we broke that slope on the downside, acceleration. So 129 was the last target I told you guys, and then look for a slope, and we're testing that right now. If it's gonna bounce, this would be the spot. Okay, this would be the spot. If we close and settle below that slope, you're looking for 27. You're basically looking for 28, the 618. Okay, and then like I said, the yearly open is 27.50, 27.55. All right, intraday looks like this. And this is, another thing I was looking at earlier, right before the webinar. I was tempted to take a long. I'm kicking myself now because it might materialize, but here it is. Here it is. The better play. Let me take a step back. The better way to play this would be a settle back above 129 Look for a pullback for a stop against this low to play the recovery. And that's all I'm saying on this, guys. If the only thing I'd be looking to do on the long side here is just a near-term recovery, maybe as high as 130, no higher. Okay, you broke a pretty big multi-month, multi-week, I wouldn't say multi-month, multi-week consolidation. Um, we're playing off of a pretty big parallel support. So if it's going to rally, maybe, 129.60, have a huge confluence region there of the 100 and 200 day moving averages. You see that? Dead on 1260. Dead on 1260. So, that would be sort of your first target, and this would be your last one. But essentially, you need to get back above the monthly open to get this thing on a straight bullish trajectory again. Even if we do recover here, these might be levels of which you look for a reassertion for another downside move. Ultimately, if we break this slope, guys, Sterling's got some problems. Sterling's got some problems. All I'm saying is that right now, if it's going to recoil, if it's going to rebound, this would be the spot. Any questions on Sterling? And that is the British pound, number 7. Number 8, dollar CAD. This looks pretty good, actually, guys. Let me just take a 60-minute real quick. Okay, nothing really to write home about just yet. Way too early. Yeah, it's going to be a flat slope. Either way, you have to look for the break of those Asia highs, essentially. Like 129.20 would be a near-term resistance break. Okay, so that is British pound. Next up, what did I say? Dollar CAD. So here's dollar CAD. First on the weekly chart. Man, what a breakout yesterday. You guys know the level. Do I even need to go over this? 34.37. We've been talking about it since the start of the year, actually since last year with this advance. That was a 2017 opens, the 618 retracement of the near-term decline from last year's high, and it's been rock solid resistance since the February or the early March attempt. So look, ain't nothing to fight here. If we close above this level, there's more upside to go. A weekly chart, right? We're looking at the weekly here. So the weekly is what the weekly close is what's going to determine, is what's going to help us make that assertion of whether it's a break or not. Watch the weekly close. Daily chart looks like this. I'll show you the intraday chart in just a moment. Objective break. Very, try to break things completely, take all emotion out of it. It's just as objective as possible. Here's your monthly open. You set a high, you set a low, you test the high, you test the low, you test the high again, break. Keeps the focus higher into the close of the month against 134. Period. End of conversation. Exclamation point. Your first targets of resistance, obviously 34.37. We talked about that at length. Was also the near-term consolidation resistance. So from, I don't know why my mouse keeps doing that. From the highs that we made last month, you can see a series of lower highs, a series of higher lows. Consolidation converged on that same 34.37 break, and we got it. Here's the acceleration. First level of interest, 34.67 was last month's actual stretch high. We got through that. 786 retracement comes in at 35.37, just higher from where we are now. Now, a couple things to note. It's the same sort of theme of all these stretch trades. Don't chase. Here's momentum with a former 3-point trigger break was a really nice turn to move lower. Here we are testing that same slope as resistance. Okay, here's the intraday chart on dollar CAD. So here's the 120. Here's what it looked like yesterday, or I guess this was on the 23rd. Coming into that major critical region, what did we say? Watch for a reaction there. If you see the top side break, you're looking for a stretch towards 34.74. It's the 100% extension. Here's the top side break. We're fizzling out a little bit. Like I said, divergence on all of these trades, guys. All of the ones that have been broken out are already showing divergence and kind of stretched and tired. So be careful. This is where traders get ripped up the most, believe it or not, especially when you're waiting and you're seeing consolidation, you're seeing range-bound price action, volatility is a snooze fest. Then all of a sudden the market breaks out, and you're right. Ty says what a chorus of breakouts and breakdowns. Absolutely, but that's where the average typical trader gets stung the most. Because if you're not pre-positioned and you didn't get a chance to take advantage of this move, FOMO starts to come in, right? Fear of missing out. Now everyone wants to jump into the trade, wants to follow the trend, but we're already pretty stretched. We're showing divergence. Remember, knowing the direction is only 50% of the game. Having a proper trade setup and being disciplined with your risk management, that's what's paramount. So I say that because, again, the upslope here, the breakout, yes, it has us looking higher. Yes, it broke upslope resistance. We should see acceleration here, but we're not. So we're sitting on this level as resistance, marking divergence. The risk is for a near-term washout before you move higher. Might give us an opportunity, but at the end of the day, the bigger play would be for a look for a reaction off 135.37. 135.52 is going to be the 1618 extension from the decline off the lows we made back in February. So two topside targets of clarity here if we do break higher, but near term, I'm just really weary here. Fake out breakout, Ty? So I don't think so. Okay, or let me just say this: the determination of that is gonna be for me the weekly close. Okay, that's what's going to determine whether the breakout was a fake out, as it were. But Ty, at this point, yeah, I mean, we've broken so many monthly opening ranges, we've broken some yearly opening ranges, and some yearly range lows and highs. So yeah, I would definitely say we were seeing some breakouts. Assuming it's going to be a fake out is a very retail trader type of thing where they try to fade every move, and that's just not my gig. I'm all about the fade, guys. You know me. I can make money on a day where the market's ripping higher, just fading off of resistance bounce. But you have to be very nimble. The better play is for us to recognize that it is a breakout. On the pullback, we'll look to repositioning. If we stretch into a major resistance, I will play the downside. But you want to be very cautious here because especially when the market first surges like this is when the retail market gets ripped. Gets really ripped up. And I sat on the desk for years, guys, watching retail flows, and this market condition is when everyone's getting excited after a long, prolonged volatility crunch, as it were. We want to be careful here, okay? I like the use of all grammatical expression for confirming what is going on in the markets. Cheers, Michael. Eman, cheers. I appreciate that. I'll take that as a compliment. All right, so let's move on. Let me do this. I have dollar Swiss and gold, and then I have your questions that I want to try to get through as many as possible. Let me just go through dollar Swiss. I didn't have a setup for you guys, but I did just have that daily chart, and I think that daily chart was pretty telling. Okay, so here's dollar Swiss on the daily. The big level that I wanted to highlight here was 102, guys. It really stretched into 102.12. Now, a lot of you might be thinking to yourself, Mike, what the hell is an 88.6 retracement? So an 88.6 retracement is actually the square root of 786. It's another derivation of the golden ratio. It's not a really popular retracement. However, in my experience, and for those of you who've been with me for years, Bipin, you probably heard this in the webinars before, I've personally found that the 88.6 retracements work really good on the commodity block. Don't ask me why. They tend to work good on Swissy, on Kiwi, on Loonie, on Aussie. Not so much on the European block, but nonetheless, there was a convergence there that brought my attention. And the convergence was the median line for the current slope that we're working with just off the lows we made last month. And then the broader slopes. Let me just show you, I guess, the real chart. Here's dollar Swiss. And we're getting, the whole point of this trade, guys, is that we're getting the reaction that we were looking for. And the reaction was for watch for the rally to halt here. Watch for a little bit of a kickback. Watch for exhaustion, especially because momentum is in overbought condition. It was even when we wrote this report, we were in overbought. This was back on the 23rd. Here we are 2 days later, and the market is still failing to make a close above 102.88. Here's the chart. All right, so if this is a basically multi-year consolidation, series of higher lows, it's not lower highs, but still giving you a consolidation, a wedge formation, contractionary range, whatever you want to call it. If this was a break that we got here on the 23rd, oh man, this should have accelerated. This should have accelerated. The fact that we didn't, and the fact this is a third day of exhaustion or attempted push to get through that, and we can't do it, in my mind, leaves the risk for a little bit of a pullback. Now, look, this pitchfork has been really clean. This line you're seeing here is a 38 or is a 618, the golden ratio of the range. You can see resistance, 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 break, acceleration. Here's the median line. Near-term support at that same slope, bullish invalidation at last year's high close. That gives you 101.08. Okay. Ultimately, I do think we get the topside break. Near term, though, I think this is getting a little tired here. Okay, so for the pullback, 2 levels of interest for possible support. Break higher, nothing to stop this thing from hitting 103. It's really 102.98. It's the high day close from 2016. But that's a big level on the upside if this breaks. And again, basic slope support off the yearly lows. Extended off the high we made back in February. Converges right there. All right, so that's sort of my take on dollar Swiss. Remember the S&B standing against this app. You know, I'm not. Yeah, Ty, I don't think about that anymore. So Ty's absolutely right. For those of you who've been trading FX for a while, everyone remembers the S&B event. That's when markets saw one of the largest single daily moves. The thing is this, you know, the S&B is not putting a floor on this anymore. Is there intervention? You know, I don't know. Is the Japanese bank intervening? Ty, these kinds of things we can't. He says they are still there. I mean, sure. Okay. What do you want to do with that, Ty? You going to trade that? I keep it focused on price. I keep it focused on price. Obviously, you'd never want to stand in front of a central bank. That's kind of trying to stop a train with a toothpick. Doesn't work. But resistance is resistance. I can't let that filter into my intraday thinking or intra-week thinking, Ty. Definitely be advised that the S&B is on tap. I think that's next week, right? But at this point, I'm just looking for a possible exhaustion trade into these highs. Here's what the intraday chart looks like. It's not developed, guys, so I don't want you to run with these levels, but I was messing around with this, trying to get some sort of setup. Whoops. Here's the 240 minute. So that 101.70 level is going to be actually the stretch high that we made from back here in March. You can see that on the pullback. That's exactly where we found some support. You know, I'm still of the mindset that this thing is a little tired, right? We might not get down into 100.70. We might not get down in a year, but if you get into that 618, weekly open support converges right there. Okay, so here's your weekly open. Weekly open support would converge on that 618 line right here. Okay, and again, on the top side break, there's a level from the, let me put this on here, from the daily chart. That's going to be your big level on the upside if it breaks. Questions on Swissy? I believe they are at 103, Ty. The SNB. I'll look into that. I really haven't been paying attention to Swissy central bank rhetoric, but you know, if it's one thing the SNB learned from trying to put in a quote unquote floor, is that that doesn't work. If it's one thing they learned, you know how much money they lost, Ty, on that peg that they had with the euro? It was disaster, absolute disaster. They spent so much money maintaining the peg level. Once it gave out, just huge ramifications. So whether they're in at 103 or 10, you know, whatever, we'll see. if markets start to take heed of that. If it's 103, Ty, man, that's even better, man. Because we got the 2016 high day close there, we got slope there, we got the median line. There's so much there. If it gets up there, sure, I'd love to see a hard card reaction off that level. Okay, they didn't lose a dime, made billions on asset buy. Oh, for the S&B peg, sure. Ty, you can tell I'm not a fundy guy. All right, the questions you guys had that you wanted to cover. So, let me cover gold first. So that was Swissy. That was number 9. Here's number 10. Gold, gold, gold. Any gold bugs in here? So I got a little gloating to do here on Daily EFX when I get to the office today because I caught so much heat for that report I put out earlier last week. And then I gave you guys the heads up this week. Look, first of all, where did we close? Does anyone remember where we closed last week? Pooja is trading gold too. Well, I hope you were on the long side this week. Eman trading gold too. Well done. 1275. Eman's paying attention. Thank you. 1275. It's the weekly chart. That's what we talked about. Guess what? We didn't get a weekly close below. In fact, we closed right there. Right there. Bippin says there's no camera button for screenshot. Guys, is the camera button missing from your go-to webinar screen? I know Ty takes pictures all the time, Bippin. It should be somewhere up there. For me, no. Marco says the button is okay. It doesn't appear if you use full screen mode. Pooja, thanks for letting me know. I didn't even know that. So, Bippin, take it out of full screen mode, and when you do that, you should see the button come up. Thank you, Pooja. I appreciate that. Or Ty, thank you. I appreciate that. It is missing. It becomes a drop-down menu. Okay, Bippin got it. Right on. Thanks, guys, for the cooperation. I love the help from everyone. So, guys, long story short, we never closed 1275, 1276. That was a key support zone. Intra-week, yeah, sure. Weekly, we closed right there. Intra-week, we spiked even lower. And this was the whole premise of this trade this week. We said, guys, we're at big support. That's where we needed to close weekly below to get the close. We didn't. Intra-week, look where that spike was. And it's funny because I was sitting here on the desk and I even texted Jamie. I was like, I think gold just bottomed near term. That's exactly what happened. Okay, we had a nice little bounce off that region. We're trading more than 10 bucks off that region already, back above support. I do think you have a little bit more upside to go, but we're not out of the woods yet. So Pooja, Eman, I'm glad that you both are holding decent positions on those, but we're not out of the woods yet. Okay, so use caution here. Daily chart would be very constructive if we get a daily close back above this. Remember, the weekly opening range is still intact. So again, we haven't really gotten bullish per se signals yet, but boy, that level was so clean. Here's a near-term resistance trigger in momentum on the daily chart. Keep an eye on that. Here's the intraday. Pooja says, more important, I want to know what resistance levels you're looking for. Yeah, I got you. Here it is. So the first level is going to be objective yearly open resistance. That's 1280. Okay, that was the first level that we had highlighted. Here's the last gold update, by the way, on the intraday page right here. Same levels. So we said, we even highlighted right here, said, look, man, that low is a big zone. That is such a sweet spot to rebound. If we're going to rebound, that's where we wanted it to go from. Not sure why my slope moved here. Excuse me, guys, just one sec. Okay. Okay. The onus or the premise of this trade was to break through 75, 76, 75, 75. That's what we did. And not only did we rebound, guys, we rebounded and held right into there. Look what it did. held. That's like an inverse dead cat bounce, right? Nothing on the recoil. Here's the final push higher. Now, why 1280 becomes more important, Pooja and E-Man, not only is it the objective yearly open, it has nothing to do with my opinion or Jamie's opinion, SB's opinion, right? It's objective fact. It's the yearly open, but it's also the objective weekly opening range high. Here's your weekly open. You set a high, you set a low in the first 2 days of the week, first 3 days of the week. We're still trading in that range. A breach above 1280 objectively would be constructive. Now, the fact that that opening range break would be off of a support bounce, even more. Even more. Okay, so your first level is going to be 1280. Listen, 1283, it was a bigger target more here because it converged on slope. And by the way, this slope, remember when we added this? I had no clue it was going to be this pretty. In fact, last week when we started to make lows on the same gradient, I never even thought we'd see it. But here's a perfect tag of support. Pivot back above the 50 line. Median line's right there. 1283 is just higher. That's why 1283 for me is not going to be as big a level now, Pooja and E-Man, because it doesn't converge on the median line. So I'm going to say this: if it breaks the weekly opening range high, we should get through the median line with no trouble. Look for 1283, as a level of which you might want to take a little off the table. But the 618 comes above the monthly open. Actually, let me see where the 50 comes into. Yeah, there's some decent pivot there too. Okay, so these are the levels I'd be watching right now. Immediately, E-Man, like right now, heading into the U.S. trade session, watch for reaction at 1280. If we get through that, 1283 would be a soft target, a level of which, in my opinion, would validate the breakout. If we get through this, it would validate the reversal in price looking higher. Then your second target beyond is 1283, right, Michael? I got your second target already. Thank you. Okay, cool. You got it, E-Man. Pooja, does that help? Great trades, guys. Both of you. Pooja and E-Man, girls doing really well. I mean, you ladies really nailed it. Good foresight there. Again, it was a gift to get this kind of reaction off of such a critical support zone. Both former resistance and near-term upslope support. I mean, you can't get cleaner than this. So we're not out of the woods yet, though. Okay, 1284. Let me say this. Let me show you this chart real quick. 240. You see this slope here? So a lot of people are looking at this as a consolidation break. A lot of people are looking at this as inverse head and shoulders. This is the neckline break, whatever. At the end of the day, that's my issue. Why I keep telling you we're not out of the woods yet. We would need to pivot back above this slope. Pooja and E-Man. That's what would sort of dispel any further downside pressure here. Okay, but all things held constant. It's beautiful. It's beautiful. Divergence into the low. Let's just get a weekly opening range break and get on the horses here. Right? That doesn't happen until we clear 1283. I'm holding call, so can't do much at 1280. Okay, I hear you, Pooja. I see how you're playing it. E-Man says, thanks for you, Michael. We're getting your amazing setups. Cheers, E-Man. Always a pleasure to be with you here. All right. Any other questions on anything we've covered so far? Wow, I'm way over on time. Jeez. So that's gold. It's a beautiful trade. Really quick, crude, don't touch it. If you feel like trading crude, go take a drink, okay? Do something else with your life. This thing is very precarious here. If you put a pistol to my head, I'm still of the mindset we pull off 66. You guys know that's where I talked about early in the week. It's holding there right now. What the hell is that? It's not really a support trigger break. It's not below 70 yet, so you can't really even assume the daily chart's giving you a signal yet. Again, a pistol to my head, I'd be looking lower. 63.57 would be where I'd be looking for near-term support on the drop. But any higher from here, and you're still risking a rally towards 68.70 and beyond. Okay, so quick note there. It just looks like exhaustion for me from what price action is doing on the near term and on the long term. Okay. I didn't get to the rest of your setups. What was that, Bipin? On some of the other crosses. So Yeah, versus the yen. I don't really cover the yen crosses to that degree on euro yen or actually euro yen is something we do typically cover, but the breakdown, I think this is still in free for all. Yen is the strongest performer. Euro has been in free fall. This thing, again, it's not really a trade that you want to get involved in unless you're already holding positioning on it. Watch the yen crosses in general. Okay, the more interesting one for me would be Aussie yen. See how that settles down near 77.75, and then the euro yen trade that we just looked like. If we get a support bounce, might be a nice recovery. Anyway, I will leave it there. Guys, I want to wish you all a great weekend. Don't forget, Jamie will be up in just a few hours with the midweek strategy webinar, and I will see you on Monday morning for the free session on Daily Effects, right back here on SB on Tuesday. I hope you feel better, you sound better. Thank you, Marco. Cheers, guys. Appreciate all the support. I will talk to you guys later. Have a great weekend. Cheers.